Hi, I'm Brooke Thacker with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, its weekly commentary as a basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see that the S&P 500 was up 2.7%, much higher than the Canadian stock market. There were three big drivers driving the U.S. stock market last week. The first one was the Federal Reserve governors were very busy with their speeches. And they had a big speaking tour where they're all out giving interviews and presentations. And overall, investors liked what they heard from the governors as well, which helped to push the stock market higher. On top of that, we did see the U.S. financial institutions pass their annual stress test that's given by the Federal Reserve, which was positive for the banks. Up until now, during the pandemic, the U.S. banks have not been allowed to, have been restricted from paying out dividends. And given the recent passing of the stress tests, it's possible that we could see the large U.S. banks start to pay out dividends or initiate their dividends very shortly, which would be positive for the sector and also to the market as well. Last week, we did see Biden announce that his administration was successful in getting a bipartisan deal done for an infrastructure package, and which was viewed as positive and gave the boost to the market towards the end of the week. If we take a look at HAC changes last week, it did cover its short sell position in the U.S. materials sector. Also as well, it increased its biotech position. Now, biotech has a strong seasonal period on average over the long term from June 23rd until September the 13th. The real sweet spot to that trade is July. We've just started the seasonal period for the biotech sector. We're coming into that sweet spot for the biotech sector on a seasonal basis. And as a result, HAC increased its position in the sector. Also, HAC initiated a position in the gold bullion sector. Gold bullion tends to perform well overall on average over the long term from July 12th until early October. And recently we've started to see the gold sector start to stabilize ahead of its seasonal period. And as a result, HAC initiated a position into the sector. If we take a look at what's going on in the markets, we can see here, well, let's start with the yield on the 10-year Treasury note. On Monday, it increased, and here you can see it was at this level here. Tuesday, it went down. Wednesday, it went back up. Thursday, back down. And look at Friday. We saw that strong run on Friday for the yield. So the yield actually went up last week overall as well, and that helped to boost, once again, the U.S. financial sector. If we take a look at the different sectors of the market here, the major sectors of the market last week, the performance, the big winner was the U.S. energy sector, up over 6.7%, which is huge. This is largely a result of the deal between the Iran and U.S. over nuclear and also oil as well, is dragging out, which is favorable for the energy sector. As well, we did see a larger than expected draw on oil inventories last week, which helped to boost the energy sector. The U.S. financial sector last week performed very well after the passing of the institutions for the stress tests. Overall, all the major sectors of the market last week were positive. The weakest sector of the market was the utility sector. If we take a look at some of the selected subsectors of the market, here you can see the metals and mining was actually quite positive, and also the steel as well, so some real cyclical sectors. Biotech was performed about market, actually. Gold was 1%, and also silver was 1.2%. If we take a look at what happened in the markets last week, we saw a very strong week for the U.S. stock market. Usually what we do see is a little bit of weakness in the fourth week of June. That didn't happen. But right now we're still in that 6-month weak seasonal period for the stock market from early May till late October. However, we are in a period coming into an interim period where the U.S. stock market and the Canadian stock market can actually perform quite well on a seasonal basis. On average, over the long term, we've seen the markets, the U.S. and Canadian stock markets, perform quite well in the first 18 calendar days of the earnings month. So that would be January, April, July, and October. We tend to see a positive trend in the markets at this time because investors tend to anticipate a positive effect from earnings being announced. Earnings start to be announced about approximately halfway during the month. Unofficially, it's the U.S. banks that kick off the earnings season about mid-month. And this year, this month coming up in July could be interesting because of the positive sentiment around the banks after passing their stress test. So we could see investors get particularly excited about the financial sector and also helping to boost the stock market. Thank you very much.